Welcome. Today, we're diving into the world of halal investing, a key part of Islamic finance. Unlike conventional investing, halal investing follows strict ethical and religious guidelines based on Islamic law, or Shariah. This means avoiding businesses that deal in alcohol, gambling, or interest-based lending, and focusing instead on socially responsible and profit-sharing ventures. Whether you're curious about aligning your investments with your faith or exploring ethical finance options, understanding how halal investing works can open new doors to smart, principled financial growth. Let's get started. Today we will talk about how halal investing works. Islamic Finance 101. So before we start, make sure to hit the like button and subscribe to my channel. In recent years, there has been growing interest in ethical investing, and one of the most distinctive forms of this is halal investing, rooted in the principles of Islamic finance. Halal investing is not just about making money. It's about ensuring that your financial activities align with Islamic values and ethical guidelines derived from the Quran and Sunnah. At its core, Islamic finance aims to promote social justice, equity, and economic development, while forbidding practices considered exploitative or harmful. This unique financial system has shaped the way millions of Muslims, and increasingly non-Muslims, approach investing worldwide. 1. The foundation of halal investing lies in Sharia law, the Islamic legal framework that governs not only religious, but also economic and social conduct. Sharia law prohibits activities involving riba, usury or interest, gharar, excessive uncertainty or speculation, and investments in industries considered haram, forbidden, such as alcohol, gambling, pork-related products, and weapons manufacturing. This means conventional investing techniques often require significant modification or outright avoidance when viewed through the lens of Islamic finance. Instead, halal investors focus on ventures that generate profits through permissible means, such as equity participation and asset-backed transactions. 2. One of the most distinctive features of halal investing is the prohibition of interest riba. Unlike conventional finance, which relies heavily on interest-bearing loans and fixed-income securities, Islamic finance forbids charging or paying interest, as it is seen as exploitative. Instead, halal investing emphasizes profit-sharing arrangements and risk-sharing contracts. For example, mudarabah is a partnership where one party provides capital and the other expertise, sharing profits according to pre-agreed ratios, while losses are borne by the capital provider. Similarly, musharaka involves joint ventures where all partners share in profits and losses, encouraging equitable risk distribution and discouraging unfair advantage. 3. Another cornerstone of halal investing is ethical screening. Investors must carefully examine companies to ensure their core business activities comply with Islamic principles. This screening often involves analyzing financial ratios to avoid companies with excessive debt or interest income, which violate Sharia guidelines. Additionally, industries involved in tobacco, pornography, conventional financial services, and entertainment deemed inappropriate are excluded. Several specialized Islamic indices, such as the Dow Jones Islamic Market Index and the FTSE Sharia Global Equity Index, help investors identify compliant stocks. This rigorous screening process ensures that investments do not indirectly support prohibited activities, maintaining the integrity of the portfolio. 4. Halal investing also emphasizes asset-backed financing. Islamic finance encourages investments tied to tangible assets or productive economic activity, rather than speculation or debt. For instance, ijara, Islamic leasing, involves leasing assets in exchange for rent, similar to conventional leasing, but without interest. 5. Another popular instrument is sukuk, often called Islamic bonds, which represent ownership in an underlying asset or project, and generate returns from actual business activity, rather than fixed interest payments. Sukuk financing is growing rapidly worldwide as a Shariah-compliant alternative to traditional bonds, offering investors a way to support infrastructure and development projects while adhering to Islamic principles. 6. Furthermore, transparency and fairness are vital principles in halal investing. Contracts must be clear, free from ambiguity, and mutually beneficial. Islamic finance discourages speculative trading and gambling-like behavior, promoting investments in ventures that contribute positively to the economy and society. This ethical framework encourages long-term growth over short-term gains, aligning investors' interests with sustainable development goals. By promoting social welfare and avoiding harm, halal investing fosters an inclusive financial system, where profits are earned fairly and wealth circulates responsibly. 7. In practice, halal investing has gained traction beyond Muslim-majority countries, finding appeal among socially responsible investors worldwide. Islamic finance assets are estimated to exceed $3 trillion globally, with growing markets in Southeast Asia, the Middle East, and even Western financial centers offering Shariah-compliant funds, ETFs, and advisory services. Financial institutions employ Sharia advisory boards, panels of scholars specialized in Islamic jurisprudence, to oversee products and ensure compliance. This expert guidance lends credibility and reassurance to investors seeking to align their portfolios with Islamic ethical standards without compromising returns. In summary, halal investing is a comprehensive approach grounded in Islamic ethical principles that govern the way Muslims, and increasingly others, invest their money. It prohibits interest, gambling, and investing in harmful industries, focusing instead on profit sharing, asset-backed financing, and socially responsible business practices. The emphasis on fairness, transparency, and economic justice offers a compelling alternative to conventional finance, promoting sustainable growth aligned with faith and values. Whether you are Muslim or simply interested in ethical investing, understanding how halal investing works opens a new avenue to building wealth while contributing positively to society. Halal investing, rooted in Islamic finance principles, offers a faith-based approach to growing wealth ethically and responsibly. By adhering to Sharia law, it emphasizes transparency, social justice, and the prohibition of interest, riba, excessive uncertainty, gharar, and investments in harmful or unethical industries such as alcohol, gambling, and weapons. Instead, halal investing promotes profit and loss sharing models like mudarabah, partnership, and musharaka, joint ventures, as well as asset-backed financing like ijara, leasing, and rabah, cost plus sales. This approach ensures that investors align their financial goals with their moral and spiritual values. Halal investment vehicles include Shariah-compliant stocks, sukuk, Islamic bonds, mutual funds, and real estate, each vetted by scholars and financial experts to ensure compliance. With the growing demand for ethical and value-based finance globally, halal investing is not limited to Muslims. It appeals to anyone interested in socially responsible investing. Understanding how halal investing works empowers individuals to participate in financial markets without compromising their religious principles. As awareness continues to grow, so does access to diverse, compliant investment opportunities, making Islamic finance a viable and inclusive component of the global financial landscape. Ultimately, halal investing represents a harmonious blend of faith, ethics, and financial growth. If you like this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.